The dream of day trading is everywhere. Screenshots of huge gains, promises of financial freedom, and stories of ordinary people supposedly striking it rich overnight. It's hard to scroll through social media or browse the internet without seeing images of massive profits, luxury lifestyles, and the suggestion that anyone can achieve this with just a few clicks. The fantasy of making a fortune from your laptop while lounging in a high-rise apartment or traveling the world is incredibly seductive. It's a vision that appeals to our desire for independence, wealth, and a life free from the daily grind. Social media and online gurus make it look effortless, selling the idea that anyone can quit their job and get rich fast. They offer courses, tips, and secret strategies, often promising that success is just one trade away. The message is clear: trading is the ultimate shortcut to financial freedom, but the reality is far from this polished fantasy. Behind the glamorous posts are countless stories of disappointment, stress, and financial loss that rarely get shared. The markets are complex, unpredictable, and unforgiving. Overnight millionaires are rare, and for every success story, there are many more who struggle or fail. Most new traders jump in with high hopes and little preparation, underestimating the risks and overestimating their chances. They often learn the hard way that trading is not a game, and luck alone won't lead to lasting success. Trading isn't a shortcut to wealth, it's a serious business that demands skill, discipline, and patience. It requires constant learning, emotional control, and a willingness to accept setbacks as part of the journey. Once you see past the hype and recognize the realities, you can start building the real habits that lead to long-term success. True progress comes from dedication, realistic expectations, and a commitment to continuous improvement. Most traders fail because they lack real education. They jump into the markets with high hopes, but without a solid foundation, they're setting themselves up for disappointment. Trading isn't just about luck or gut feelings. It's a skill that requires time, effort, and a willingness to learn from mistakes. Think about it. People often spend hours, sometimes days, researching the best smartphone before making a purchase. They read reviews, compare specs, and ask friends for advice. But when it comes to investing their hard-earned savings, many skip the research entirely and dive right in, barely glancing at how the markets actually work. Watching a few quick videos or joining a chat group might feel like preparation, but it's not enough. True trading knowledge comes from deep study, practice, and understanding the risks involved. Without this, trading becomes little more than gambling, hoping for a win without knowing the odds. The next big mistake: ignoring risk management. Many traders see warnings but brush them aside, thinking they'll be the exception. New traders often risk huge chunks of their accounts on a single trade, convinced that one lucky break will make them rich. But when things go wrong, losses can wipe out months of progress in seconds. Even professional traders are wrong about half the time. The difference is, they have strict rules to keep losses small and let their winners run. They know that survival in the market is about managing risk, not chasing every opportunity. Then there's emotion, fear, and greed. These powerful feelings can cloud judgment and lead to impulsive decisions. FOMO, or the fear of missing out, pushes people to buy at the very top, while panic and anxiety force them to sell at the worst possible moment, right at the bottom. Without a clear trading plan, emotions take over. Traders become overwhelmed, second-guess themselves, and watch their losses pile up, feeling helpless to stop the cycle. These three mistakes, lack of education, poor risk management, and emotional trading, trap most people in a losing cycle. It's a pattern that repeats over and over, keeping the odds stacked against the average trader. The market isn't rigged, it simply rewards those who are prepared and punishes those who aren't. If you want to win, you need to break the cycle. Learn, plan, and manage your risks. Meet Alex, a brand new trader who's just getting started in the world of stocks. Like many beginners, he hears about a hot stock tip from a friend and gets swept up in the excitement, thinking this could be his big break. Without taking the time to research the company or understand the risks, Alex dives in head first, investing his entire account balance. There's no strategy, no backup plan, just pure hope and adrenaline. Suddenly the stock price crashes after some unexpected bad news. Instead of cutting his losses, Alex clings to hope, convincing himself the price will bounce back if he just waits a little longer. But as the losses pile up, fear and panic take over. Unable to handle the stress, Alex finally sells his shares at a huge loss, feeling defeated and overwhelmed. Frustrated and desperate to recover his money, he jumps into another risky trade without thinking. This is called revenge trading. Unfortunately, he loses even more, digging himself into a deeper hole. In just a few days, Alex manages to wipe out over half of his trading account, all because of emotional decisions and a lack of preparation. Stories like Alex's happen every single day. Traders jump in without research, risk everything on a single trade, and let their emotions dictate their actions, often with disastrous results. The real danger in trading isn't complicated strategies or advanced techniques. It's the simple, avoidable mistakes that most people overlook. Successful traders avoid these traps by sticking to a well-thought-out plan, doing their homework, and always managing their risk carefully. Sadly, most traders don't follow these basic rules, and that's exactly why so many end up losing money in the markets. So what do the top 1% do differently? They treat trading like a profession, not a lottery. They invest in education, study markets, and never stop learning. Every trade follows a written plan: what to buy, when to enter, where to set stops, and when to take profits. This plan keeps emotions out and discipline in. They risk only a tiny fraction of their account on each trade, ensuring no single loss can wipe them out. Patience is key. They wait for the right setups, not constant action. Their edge is discipline, risk control, and relentless learning. Don't be discouraged. Success in trading is possible, but it's a marathon, not a sprint. Focus your first year on learning and surviving, not getting rich. Start with paper trading to practice your plan and manage emotions without risking real money. When you go live, trade small, so small that losses don't hurt. Gradually scale up as you prove you can stick to your plan. The real goal is building habits, discipline, and patience over hundreds of trades. Trading can lead to financial freedom, but only for those willing to put in the work and avoid the common traps.